Stocks are mostly lower on weak corporate results, dollar rallies across the board. U.S. stocks climbed past their all-time highs on Tuesday. The S&P 500 reached 2,933.68 points, breaking through the historical closing high of 2,930.75 points set at 7 September. The Nasdaq nearly hit 8,121 points, beating the 8,110-point all-time best close it hit in August. Stocks were driven higher by Tuesday by stronger shares in the consumer goods, healthcare, and technology sectors. Among the best performers of the day were Hasbro, Twitter, and Quest Diagnostics. Despite a rally on Wall Street, Asian stocks were mostly lower on Wednesday. The biggest loser was South Korea's Kospi that slid more than 1%. The Nikkei 225 in Japan declined to 0.27% on the day to 22,200, while Hong Kong's Hang Seng Index was 0.57% lower. Meanwhile, mainland Chinese shares recovered from their earlier slip to finish higher, with the Shanghai Composite rising to 3,201.61. Australia's ASX 200 added 0.99% to 6,382.10, its highest close in more than a decade due to a decline in the Australian dollar, which tumbled to $0.7042 following the release of inflation data, which came in at a record low, raising the prospect of a rate cut by the Reserve Bank of Australia. Investors have partially reacted to the news that the U.S. lawmakers are likely to head again to Beijing for final trade talks ahead of Chinese leaders meeting during early May. In Europe, stocks closed lower on Wednesday, dragged down by weaker than expected corporate earnings and some retreat in crude oil prices. The Pan-European Stock 600 ended the session slightly below the flat line. Europe's auto stocks were also sold off, down more than 1% after Nissan slashed its full-year profit forecast to a near-decade low. The automaker said that it now expects operating profit for the year, which ended in March, to drop 45% versus a year earlier. U.S. equities fluctuated on Wednesday as investors assessed corporate earnings and economic data. Treasuries joined a global rally in sovereign bonds, and the dollar extended its rally to a 4-month high. Nasdaq squeaks out a new all-time high but backed off quickly. The greenback made a big run after higher against major rivals on Wednesday. The euro-US dollar slipped to a new low for 2019 and traded at the lowest level since June 2018, around 1.1140. Apart from dollar strength, the common currency was under pressure from fundamentals. The German April IFO survey missed expectations across the board as the domestic economy continued to lose steam in the second quarter. The overall assessment of the business climate slipped back to 99.2 from a revised 99.7 in March from 99.6. The USD-Japanese yen pair broke above the 112 area and jumped more than 30 pips, reaching at 112.40, the highest level since mid-December. The GBP USD also kept bleeding as the greenback strengthened across the board. The pair declined to mid-February lows below the 1.29 handle after a break of the key mobbing averages around 1.2960. Interestingly, despite a widespread dollar rally, gold gained traction and recovered this week's losses as the precious metal finally capitalized on the flight to safety. The precious metal touched around a daily high above $1,278 and settled around $1,275 later. Meanwhile, oil prices were fluctuating on Wednesday, struggling to extend the rally after reaching a fresh top marginally above the $74 handle. Brent encountered some bids around $73.40 and turned flat on the day. The EIA said inventories had risen by 5.5 million barrels in a 7-day period, 2 days after the United States announced it would be canceling the waivers it had granted 8 oil importers so they could continue buying crude from Iran. Gasoline inventories shed 2.1 million barrels in the week to April 19th, with distillate fuel stockpile 700,000 barrels lower than a week earlier. Crude production inched 100,000 barrels higher, back to its record high at 12.2 million BPD. Initially, prices jumped on the news sparked by worry about supply security, but later they eased down again as the supply situation globally appeared to be satisfactory. After the initial shock from the announcement about the removal of Iran sanction waivers, things seem to be calming down. And today, investors will continue monitoring geopolitical developments, further dynamics in the oil market, and assess fresh economic data. The U.S. durable goods orders will be the key release of the day. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.